Welcome back to our channel, guys. We have Jax here. For those of you who are new here, please can you subscribe if you haven't already, and those of you who are not new, why have you not subscribed? So we have the fabulous Jax here.
Hey.
Welcome.
It's a pleasure to be here.
Thank you. Before we get started, can you just introduce who you are and what you do?
Yeah, so my name is Jax, or Jacques, if you want to say it the French way. So it's spelled with a Jacques.
Is the French
No, I'm Ghanaian. I'm fully Ghanaian. I think I'm like the epitome of a Ghanaian.
Fully.
So I think it's just probably my mom just likes fancy names.
Okay.
So yeah, that's my name. My day job, I work in the investment management industry.
Okay.
So my job title is investment manager,
okay,
which essentially really means I help to manage assets of different clients,
okay,
ranging from different institutions, corporates, charities, and wealthy families, for example. So that's what I do for my day job. And aside from that, I do have a passion further than just investment management. I do have a passion for personal finance. So I run a social enterprise called Woke Finance, which I started when woke was a very lovely term, an exciting term. And essentially what we do, way before COVID. And what we do is we educate young people. So we go to schools, youth clubs, different youth organizations, and we provide them with financial education. So teaching them.
Find the time to do that?
When you have passion for something, it's not always work. It's just something that I really enjoy. So that's kind of what I do outside of my day job.
Okay. And how long have you been teaching people about finance? So outside of woke, how long have you realized that the passion was in you to teach finance?
Oh, probably from the age of 16.
How?
Now, not finance per se, but I've always enjoyed teaching. So I'm one of those people that in class, even though I wasn't the brightest in the class, one thing I understood well, I was able to teach other people. So you found that a lot of the other students in the class always come to me and say, Jax, I don't understand this. Can you teach it to me?
Okay.
So way back then, from secondary school to college to university, I noticed I enjoyed teaching people stuff that I understood very well.
Okay.
But probably more with personal finance when I was probably in my mid-20s, it became very evident that not many people were in my industry. And so the people that knew that I did, investment management, would ask me questions like, oh, how do I get started with investing?
Yeah.
And of course, I was excited to sit them down and talk about the things that they should be considering, how to get started. And I remember this was before it was quite popular on social media. I think in recent times it's become so much more popular.
There's a lot of people online
But back then, it wasn't very popular. And actually, even the options available were not that much as well. So, yeah.
But what inspired you to get into, obviously, stocks, shares, all that investing? What inspired you to get into that specifically? Was there a pinpoint? Was there a moment that was like light bulb moment off?
Yeah, well, it depends if you mean as a career or as an individual, as a career. So, I mean, if I'm honest, at college, I chose certain subjects. I've said this in previous interviews with other people that I chose to study maths because I was okay at it. I'm not a brilliant mathematician, but I'm okay. And I literally chose to study A-level economics because it sounded good. Okay. Not because I knew what it was.
You know, I've done the same thing. I chose college because I thought economics linked to maths.
Yeah,
so that's exactly why I picked it.
Yes.
So I was just like, huh?
Yes. So I was like, you're okay at maths. You probably enjoy economics.
Same.
So be it. So I literally chose economics because it sounded good. And at first I was horrible at it because at the A level, at that stage, you don't really do a lot of maths. A lot of it is theory. A lot of it is to do with like macro
100%.
And writing essays and stuff like that. So I really didn't enjoy it at first, but cut a long story short, it became my favorite subject. And I actually preferred the fact that it wasn't so mathematical, even though I went on to do a bachelor's degree in pure economics and then a master's in financial economics.
Oh, wow.
So yes, when I was doing my bachelor's, I realized I enjoyed macroeconomics and I also enjoyed financial economics. Well, because money was interesting, right? Especially when you come from poverty and you're learning about money, it is interesting. And again, even after I finished university, I didn't really know what I wanted to do. I knew it had to be something financial. But again, when you come from a background where nobody around you is doing anything financial, or you've never seen anyone that works in the city, you don't really know what options are available.
Okay.
And so I always say it's probably God's doing. I just happened to fall into a job that was in a back office of an investment management company. And that was my introduction into the industry.
Okay.
And then, the rest is history.
So what made you do the masters if you were already in that setting?
That's a great question. So actually, the job I'm talking about was after my masters.
Okay.
When I finished my bachelor's degree back in 2011, gosh, that seems like a long time ago now. Back in 2011, at the time, the kind of job market wasn't very great. And unfortunately, I didn't get on a graduate scheme, which was the common, most popular way for most people to get into like investment banking or whatever. And to be honest, I didn't really know what I was going to do. So I was just applying for anything that had investment or finance in its name. But cut a long story short, I didn't get any. So I just came back into London after university and just started working to earn some money. And then actually, gosh, I'm just remembering it now. It was my pastor at church who sowed the seed of doing a master's. And I was just like, God, no. I've done the study, and why do you want me to go and do a master's? But I did think, well, if I went to do a master's, it will also open up the gates to go reapply for a lot of graduate schemes.
Okay.
And also, actually, aside from that, I noticed when I was doing my my bachelor's degree, I didn't learn much. And I know that sounds strange.
Learn much.
I mean,
you learned the theory, but not how to put it into practice.
Exactly. Well, you've hit the nail on the head. So, yes, I did the course and I passed with a 2-1 degree, but I felt as if even my A-level economics was more practical than my bachelor's degree. And so actually my master's is in applied economics and financial economics.
So practical.
Because I wanted to practice. It was just not so much theories and models and stuff like that. So combining all those things together, the fact that I wanted to learn how to apply my degree, but also, the influence of someone that I respected, it was a good idea to do the masters. And that was challenging, but we made it in the end.
Amazing. So you mentioned obviously your pastor. So obviously, well, explain your background in terms of where you're from. You mentioned you're Ghanaian.
Yeah.
Are you first generation?
Yeah, well, I mean, I always get confused about that terminology.
Parents have come parents are first generation, and you're...
Yes. Okay. My dad came in the 80s, I believe, and my mom came in the 90s.
Okay.
And when they gave birth to me, they left me in Ghana. They left me in Ghana, my grandparents. And then
this is a common story.
I know, right? But then when my youngest brother was born, they decided to bring me.
Okay.
So I actually only remember meeting my parents probably when I was probably about 4 or 5 years old.
Oh, really?
Yeah. Okay. So that's me. I'm Ghanaian through and through. I'm Ghanaian through and through. Born and bred. In terms of who I am as a person, I am also a Christian. So I've been in church all my life, but I always say to people, I really just became a real Christian, if you want to call it that, kind of giving my life to Christ as an adult. Not that long ago, I'll probably say 2018, 2019.
Okay.
But I really made that kind of call to take my Christian walk seriously.
Okay.
So that's me. I love God. I love people.
Yeah.
I just really love people. I love to meet new people. I would like to say I'm intellectually curious. I like learning different things from different people, from the craziest backgrounds. I don't know. I'm one of those people I can watch those animal shows and just sat there for 2 hours trying to learn something.
I like my husband. Yeah.
So yeah, that's me. And quite obviously, I have a huge passion for personal finance.
So going back to your upbringing and you been coming from Ghana to coming here, was there any experience of stocks, shares invested in your family? Were you the first to do it? So what made you? I obviously have already asked you about your background of getting into it. But coming from first generation African homes, were they not like, what are you doing? What is this crypto money making thing that you're doing?
Yeah.
What was their stance with you when it came to your job and when they understood what you were doing?
I'm not even sure if my parents understand my career.
Even
now. So I've been quite independent in my journey of picking my own career path for a very long time.
Because normally most Africans are like doctor, lawyer, engineer.
Yeah, they tried.
Outside of that,
they tried, and they tried to move me towards accounting, which is quite similar to finance, right? But no, I think they kind of trusted me to make my own decisions. Look, in terms of investing in the stock market or working in investment management, they didn't have a clue. They just knew that I was working in finance. Interestingly, just a few years ago, my mom would always ask me like, oh, when people ask me what does Jax do, she doesn't know what to say. And I said, well, just tell them I'm in financial markets or I work in financial services because that captures a lot of different a lot of different careers.
Yeah.
And then as an individual, actually learning how to invest, that's a whole different conversation. Obviously, I was privileged and lucky to actually work in the industry, so to pick up some of the actual theory and practice. But, to be a good investor, individually, is more than just what you learn at work as well.
Okay, so like you just said, a lot of people can find it very intimidating. So for a beginner, what tips can you give a beginner in investing? So if they have absolutely no clue, but they know they want to do it, what tips can you give an absolute novice on where to start?
Yeah, if you are an absolute complete beginner, I think the first thing I would want to really nail down is for people to understand you don't have to go it alone. I think that's probably the misconception I see a lot on social media, where people want to teach people, tell people what to invest in, but actually you don't have to if you don't want to. Right? I mean, if you're interested, then that's a different conversation. But you can outsource the investment management to someone else. So I say to people, starting with if you're a high net worth individual, or if you've got 6 figures to invest, for example, in that respect, I would encourage you to speak to a regulated financial planner. Or an investment manager, investment advisor, etc. If your net worth is not that high, you're just starting off, absolute complete beginner, I think it's important to understand there are platforms out there, especially nowadays, where you can actually invest with small amounts of money, and the platform itself will do the investment for you.
So they'll pick a market to invest in?
So what they will do is, and I think this is really important actually, what they will do is they will ask you for what's your objective, what's your time frame, what is your risk tolerance, and they'll ask you a few other questions. And then based on your answers, they will use, for example, algorithms to create a portfolio unique to your circumstance.
Really? I didn't know that.
And that's really important. I think I say often that people need to understand that, because what I see on social media more so than often is everyone wants to invest in index funds or S&P 500.
That's all I hear.
And that's all you hear. And it's not bad advice, but it's very incomplete, because a good investment is one that is there to meet a specific objective. That is optimizing your risk tolerance and your time horizon.
And if they ask it in the initial stages, you've really got that all packaged for you.
Exactly. Whereas most people, I'll give you an example. I do some one-to-one coaching in my spare time. And someone will come to me and say, oh, I've invested in the S&P 500 because someone on social media said that's the best way to do so. And I said, well, it's not the worst advice, but let me ask you a few questions. What is your objective? What are you trying to achieve in the first place, right? They may not know. And that's okay, right? Forget objective. What is your risk tolerance? They don't know the answer to that. I said, well, okay, I understand that's a difficult question. Choose a risk tolerance between 1 and 7. 7 being the most risky and 1 being the least risky. And they would choose something like 4. Some people choose 3, etc. And I said, well, that's fine. There's nothing wrong with that. But if you are invested in an S&P 500 ETF or index fund, if you look through that fund's prospectus or fact sheet, the risk tolerance of that fund is likely to be 5 or 6 out of 7. So actually, by investing in this asset,
more riskier for you.
It doesn't match your risk tolerance.
Got you.
You get what I'm saying? So and I think that's probably the mistake I've seen a lot of the time, where everyone and anyone thinks that is the best investment for them, when actually it's not.
So what's your risk tolerance? Is your risk tolerance heightened over the years, or have you always been Mr. 10?
That's a great question. It depends. There are so many different stages in our lives where our risk tolerances will change. And actually, the first few things I mentioned to you are interlinked. So often your objective, your time frame, and your risk tolerance are all a triangle, right? So if you've got a young person and you want to invest for your young person, from, let's say, the moment they're born until they're 18, and you say you're going to use that capital to fund university or help them go on a property ladder or start some sort of business, that young person has such a long time horizon that they probably should take on more risk. They can take on more risk than someone who Auntie Pat down the road who's about to retire, right, and has been building her asset base for many, many years and now needs to live off those assets. Her risk tolerance is very different from young, I'm going to call it young Kwame, young Kwame who's just been born. So it is different. So your risk tolerance can be defined by, for example, how much time you have. I think that's a great indicator. But also just your personal experience, right? So if you have no experience in the stock market and you put all your eggs into the stock market because you heard that the S&P 500 is a well-diversified fund, and you don't have an experience of experiencing that volatility on those assets, then the chances are the moment it goes down, you're going to run out, and that's the worst thing to do, right? So experience is one of those things as well. And then when we talk about risk, there are different ways to categorize risk. But I think the two ways that the individual can do it well is one, look at something called your capacity for loss.
How much are you willing to lose?
If you were to lose what you've just put in, what does that mean for your life? Right?
Yeah.
So if you lost everything, does that mean that it's time to, I don't know, do something crazy or whatever?
Yeah.
That's your capacity for loss.
Yeah.
So there's different ways to kind of look at risk. And I think ultimately, if I really look at my industry, a big part of what we're trying to do is really risk management. Ultimately, what we're trying to do for clients is to achieve the best risk-adjusted returns for the client to meet their objectives. That's what investment management really is all about. And that's why people pay investment managers, right? Because if that was the case, everyone would just put the money in S&P 500.
Yeah, but there's a reason people have to manage it for you.
Exactly.
So what do you think about spread betting then? No, when I was younger, when I was in uni or had just finished uni, I wanted to make as much money as possible, wanted to try and make money additional to my 9 to 5. So I found about spread betting. I would not sleep. I'll put money in there, be watching the pips go up and down, putting my stop losses there, but still watching it. I would not rest. So I understand the people that do it because they either have a high risk tolerance or they know the market. Look, I couldn't handle it from my heart.
Can I be really honest? I think the key thing is there's a difference between investing and trading. And I think people confuse the two terminologies. Can you explain the two? Yeah. They're very different. Okay. When you are investing, you are replacing your cash, your capital for something that has a higher probability and often a history of going up in value and or producing an income. So when you invest in property, you are buying the property, you exchange your cash for the property. Property has a history of going up in value and or you can get rental income. 100%. So that's an investment. When you're flipping property, that's different. That's a different ball game, right? So that's not an investment. That's a business, really, truly. Flipping property is really a business. And similarly, trading is not investing. Yes, when you make an investment, you make a trade because you exchange your capital for an asset. It could be a stock, a share, property, bonds. You're exchanging it. But often an investment has a minimum time frame of 5 years. And I think that's really important. When you are investing, your time frame should be a minimum of 5 years. Anything less than that, you're probably not investing.
Would you call it gambling?
You know what? I always say when you make a trade, you're doing one of three things, right? You are either investing, based on what I've just described. You are then either next thing is either speculating, or you are gambling. And this is just my own kind of way of describing things. When you're speculating, it's a type of gamble, but you have done some sort of, you have some sort of, how do I put this?
Due diligence.
Some level of due diligence. And maybe not, I don't want to call it due diligence per se, but you're making a bet. So spread betting often is a speculation, right? You're guessing based on a few things that this might happen kind of thing, right? But it's not an investment per se. An investment is requires a bit more due diligence. So for example, when we're watching, what's that show called? Dragon's Den. Or in America, they have Shark Tank, I think, or something like that. Notice the questions that the sharks or the dragons ask. Lots of questions. What's the revenue? How much did you make last year? And they're writing. That's what we call investing. They're really doing some calculations. Whereas when you're speculating, you're just kind of, there's a bit of hope involved kind of thing, but you do have some level of inclination as to what can happen. So that's speculation, right? And then there's gambling, which is pure vibes, right?
You said vibes.
It's just pure vibes. It's just, do you know what? And do you know what? And I think what I want the listeners to understand is I'm not saying these things are wrong. I think you just have to be honest about what you're doing. And so sometimes you can take what we call in the industry a lot of the time, for us that do like personal account dealing, is we say, I'm just taking a punt. Right? And that's okay.
You're risk tolerant. At that time, you're happy to lose it.
So just say that's what you're doing. Don't say, I'm investing. No, you're not. You're not. You're taking a punt, and that's okay. If you know what you're doing. I think if you know what you're doing, you behave differently as well. So if you think you're investing, but you're actually speculating or gambling, chances are you'll make a lot of mistakes, kind of thing. So yes, it's important to define the difference between investing, speculating, and gambling. Okay,
so someone who's on an average salary, what are like 3 practical steps they can take to start building their wealth through investing, or where should they start on their investment journey?
Well, average income, low income, I think the key thing is to follow some basic personal finance principles that have stood the test of time.
Like?
Such as earn more than what you spend, or pay yourself first.
Okay.
Right? So, yes, I mean, looking at the formula, earnings is one of them, right? So you do, over time, you do want to find ways to earn more money.
Yeah.
But if we're talking today, if you are able to earn more than what you are spending, then it's about just getting involved, right? And starting small, because you don't have the experience of volatility in the markets and stuff like that. So just start small. Nowadays, the great thing is many platforms allow you to invest with small amounts of money. So just start small, get exposure into the different markets. I think allowing a platform to do it for you is fine when you're just starting off. One of the things I encourage friends to do, not financial advice, but I encourage friends to do, is maybe split it 50-50 and say half my money is going to go purely to a passive vehicle where the platform does everything for me.
Okay.
And the other 50%, I'm going to learn and kind of get my feet wet and make mistakes and
knowledge
and that kind of stuff. So that's what I would say. Probably try and approach it that way.
Okay.
There is a terminology that is used in my industry called it's called a core satellite approach. CORE for core. Okay. And then satellite as in things in the sky. And essentially what that means is when you're building a portfolio, the core should be in some sort of passive vehicle.
Okay.
So usually we say like index funds and stuff like that.
Okay.
But you can also just allow a platform to do it for you if you're using the same terminology or ideology basically. And then the satellites is the extra. So wherever you have left, you can just pick stocks or enjoy the game, wherever. So 70% of your income can go towards the passive vehicle.
And the 30% you can play with.
Exactly. You don't check. And that one, you don't want to check it every day. You might want to check it once a quarter at best, maybe twice a year. Okay. You can do once a year, really, if you wanted to. Okay. And you can have a bit of fun with the others. Okay. So this obviously isn't financial advice, but what platforms would you recommend for beginners that you have used or that you know are good? Yeah. So, I mean, I would always say, when people ask me that question, I always say to them, what supermarket is good? How would you answer that question, right? Because we can say Tesco's pretty decent, Aldi's cheap, Waitrose is for the bougie people, right? Do you know what I mean? Costco has to have the deal. So there's the same thing when it comes to platforms, right? There's different platforms that suit different people. So for example, I use Hargreaves Lansdown, but I'm sure many people will be like, oh, they're so expensive, and but I've used them for years. I've used them for years. I like the platform. They've got amazing customer service, and I'm comfortable with Hargreaves Lansdown. And the interface as well. If you're used to it, sometimes it's difficult to pull away from something that you've used for so long. The interface, that's a great one. Like if you like the interface, the way it even is set up, that could be a decision maker. So, but I would go further to try and give some guidance as to what I think is good. So, the platforms I've used in the past, personally, are Hargreaves Lansdown. I've used Trading 212. Okay. Which is I'm currently using as well. Okay. In combination with Hargreaves Lansdown. Sure. I've used a Nutmeg. Nutmeg is a robo-advisor. So earlier I was talking about a platform that does everything for you. Okay. I've used them for quite some years. Okay. So they're quite similar to like Moneybox. So my missus uses Moneybox, for example. These are all good platforms, but they're different. So if you want a passive vehicle, just everything done for you, then Moneybox, Plum, Nutmeg, these platforms are good for that. If you're a bit more experienced, probably have a bit more money to play with, Hargreaves Lansdown is preferably good. Okay. If you just want to invest in index funds and mutual funds, then platforms like Vanguard are good. Yeah. My only thing with Vanguard, but by the way, fantastic platform, cheap, etc. But the only thing people need to realize is think about Tesco that only sells Tesco items. That's a Vanguard kind of thing. There's other platforms like AJ Ball, etc. They're all pretty decent. Compare the market can help you. What are some of like key trends or sectors in the stock market that you think offer really great opportunities for like 2025? So currently, right now, what are some of the trends that you think people who want to get into it should be hot on? That's a great question. I mean, it depends on what you're trying to achieve, right? With your investments. Now, there are some themes that are obviously very exciting at the moment. Enlighten me. Artificial intelligence being one. And I think it's been exciting for a long time. Yeah. And actually, I would say the best time to have invested in it was probably 5 years ago. I know. But look, I think the world requires more efficiency, a bit more speed, etc. So for the next decade and multi-decades, most definitely technology and artificial intelligence will play a huge part.
Yeah.
But there are many different sectors in, for example, the stock market, and I think it really depends on, again, what you are trying to achieve. If you're trying to get outsized returns over a long period of time, then tech sectors such as communications or information technology, in my opinion, will do very well over the multiple decades.
100%.
But then if you're someone who's trying to preserve capital and not necessarily outpace or get the craziest returns, then certain industries have been great for a long time, like consumer staples. People are still going to buy their toilet paper and still going to buy their Vaselines.
Yeah.
So consumer staples will probably do okay for the defensive investor. That's what we say, for someone who's trying to preserve their capital and not grow their capital too much.
Okay.
And then there are other themes that I kind of see out there that I think are quite important, such as energy transition, moving away from resources like coal, etc.
Renewable.
And obviously climate change is a big one as well. So looking towards things like wind farms or electronic vehicles, etc. These are themes that you can consider. So that's energy transition. What others? An aging population, right?
Yeah.
So we know that we're living longer.
Yeah.
And if you look at the wealthiest people on the planet, or in the Western world anyway, they are the people that are much older.
Yeah.
And then you ask yourself, where is their money going to be spent? Probably on sectors like healthcare.
Okay.
So healthcare could be one of those sectors that are part of the thematic kind of opportunity. So yeah, I think there's opportunities everywhere in the stock market. It really depends on, first and foremost, what you're interested in, the risk you're willing to take, and what you understand. Many years ago, when I first started learning how to invest for myself, I read a book by a guy called Peter Lynch.
Okay.
He's got two books. I can't remember exactly which one it was. It might have been One Up on Wall Street or Beating the Street. It was one of those books. And he talks about investing in companies that you understand.
Okay.
So if you are in the healthcare industry and you know this next thing is coming up, like this next heart replacement thing, then maybe you should be you've got that advantage over the average person.
Insider knowledge?
Well, no, because it's not inside knowledge in the sense that insider knowledge it is insider knowledge, but it's not insider dealing.
Yeah.
In the sense that insider dealing is essentially you're a public company. You've told me that, hey, look, this company is about to buy us out, and I said, well, okay, I'm going to go buy shares. Yeah, that's insider trading. That's illegal. But having knowledge in your industry is a great opportunity and a great advantage.
Okay. So you mentioned before about if you're looking to invest, it should be like a 5-year term. So what are some of the what's your take on short-term and long-term trading? Have you got a preference? I know you mentioned obviously depending on your risk tolerance is how you should invest, but do you think one is better or one favors the other?
If you ask me, Jax, I will always say investing is more guaranteed.
For the long term?
For the long term.
Okay.
Right? Well, I mean, investing is long term, right?
Yeah.
So, when you invest wisely, by wisely, I'm talking about investing in a wide range of assets, by diversifying your portfolio, right? These simple principles, and giving your investments enough time to outpace inflation. History will show us that that's what it does. So I always still talk about since 1900, whether we've had depressions, world wars, lockdowns, financial crises, the stock market will drop, but it has always come back up. So over the long term, I think there's only one period, I think, where in 10 years you've got something called a lost decade. I think it was 2000 and it might be 1999 or 2000 to 2010 or something. So you have the dot-com bubble at the beginning and you've got the global financial crisis at the end. That's the only time you would have lost money if you invested for a long period of time. But there's many statistics that show that there's like a 90-something% chance that if you've invested over 20 years, you will make money.
And that's similar for property as well. Like the trajectory for property is properties double every 10 years. So it's very similar. If you put your money in there, it's a good stock of wealth. You believe because of the data, it will go up.
That's assets for you, right? Yeah. It's because it's valuable.
Exactly.
Right? And it will outpace inflation, which actually is one of the main reasons why the average person should be invested anyway, right? Now, trading, I think, is just for a handful of people. Personally, I think if you're someone who has already got the foundation, you've got high income skills, you're not in debt, you've got some financial covering, and you're okay, and you want to take more risk, and you have an interest in this area, then the world is your oyster.
100%.
You can go for that. But for me, I wouldn't advise anybody to start doing that first. I would say only do that if you've got your portfolio structured already for the long term.
Yeah. Okay. So you mentioned before that when we first started speaking about you do one-to-one mentorship with people. So when you are coaching people, how do you coach the newbies to overcome the fear of investing?
That's a good question. I think practically what you can always do is when you're starting, just start small, right? And I know many people want to start off empowering people, and I think that's really important to empower people. But I think I'm also very conscious of making people aware of the risks involved with investing. And so I try to find a blend between empowering people to get their money into the stock market or different asset classes versus understanding that, look, this is not going to be a smooth journey.
Or a quick one either.
And it's most definitely not going to be a quick one. So the key thing is education is important. Once you know, you can make informed decisions. So I'm really big on education.
Do you think you can teach anyone to do investing? Do you think, people always say it depends on your mindset. If your mindset isn't there, then you're never going to get it. Whether it's to do with property, investing, just life in general. If you don't have a positive mindset, you can't get there. Do you think that's true or not when it comes to investing? I really think, before we start, investing is one segment of a bigger conversation. Investment is a vehicle, right? It's part of a bigger financial plan. So when I talk about investing, I talk about it being something that helps you to either solve a problem, help you to get to meet a certain objective, but it's usually part of a more holistic journey. It's part of a bigger plan, right? So we're talking about generally your general financial plan. Have you sorted out your wills and your life insurance and all these different things? And if you haven't done all those things, then and you're rushing to invest, in chances are your mindset's not in the right place anyway. Oh, really? So would you dissuade them from doing that until they have their other things in order?
Oh yeah, I mean, I've come across people that want to invest, and I use investing in those marks, and they have crippling amounts of debt.
Okay.
And it's like, you've come into this arena with the wrong mindset, and you're going to get burnt. This is how the stock market could be a very dangerous place. The S&P 500 has been going up for how many years, but most people have lost money investing. How do you explain that? It's because people have come into it with the wrong mentality.
You believe most people have lost money in it?
Oh yeah. I mean, a lot of people have lost money in the stock market. I'm going to say most people, it depends who I'm talking about, but there's a lot of people that have lost money in the stock market.
People that don't have fund managers do it for them. Do you mean the individuals who do it themselves, or even fund managers who have the knowledge, who have the expertise as well? Okay,
so we can separate it out. Fund managers over time will make money. Because that's what they're trained to do. Otherwise, they'll lose the job very quickly. Right?
Yeah.
Whether they will outpace an index fund, for example, is a different conversation.
Okay.
And the data will show us that actually most active fund managers do not outpace just a index fund. So that's a different conversation. But for the individual, it's more to do with coming into a stock market where it's different from property. Let's talk about our demographic.
Yeah.
Our demographic understand property much more than they do stock market.
100%.
And I can guarantee you that they will make more money in property than the stock market. Even though you would have made more money buying shares in Amazon than buying the best property on the field, right? And the reason behind that is all to do with the education and the mindset. Property is an illiquid asset.
Yeah.
It's a tangible asset. You can touch it, you can feel it. You can't buy it today and sell it tomorrow in theory.
Yeah.
Right? I mean, you can, but you know how it is, right? Whereas the stock market, if you buy it once the market is open, you can start at the holder and it will be changing its valuation right in front of you. And that causes us to make irrational decisions. That causes us to make decisions that actually don't make sense if you really think about it. But because we are human beings, and because we have emotions, there are certain decisions we will definitely make that will supersede our rationality.
Yeah.
Okay, so I do think a lot of people come to the stock market, firstly, thinking they can make money quite quickly because you can. Yeah. But they forget you can easily lose as much money very quickly as well. And because it's a liquid asset class where you can buy and sell within minutes, people try to make money very, very quickly. And again, that fuels a mindset that then causes them to lose money over the long term. I have this phrase that I say that the worst thing that can happen to a gambler is for them to win. Initially,
they'll keep going again and again and
they'll
again.
keep going again and again, and they'll keep betting bigger and bigger and bigger until that one big loss wipes them out.
Yeah.
And I've seen it happen with people that have built portfolios, hundreds of thousands. Then they go big because they have this. There's a behavioral finance term that we call it. It's called we have illusion of control and we've got overconfidence bias. This is a real psychological term, right? And now you start betting bigger, thinking you actually know what you're doing.
Yeah.
Whereas there are many reasons why a stock can go up that you don't know. I'll give you an example. Over the past, since the global financial crisis, the stock market generally has been going up.
Yeah.
Which means most people that have been in the market should have made money. It's a similar thing for the property market, by the way. Right? It's been going up in value.
It has.
Right? But there's a saying that I think Warren Buffett said, when the tide goes out, you see who's swimming naked.
Yeah.
When the macroeconomic environment is good for asset classes, or what we call risk assets, like property, stocks, then if interest rates are low, right, asset prices are going to go up. It's how it works.
Yeah, all the time.
People don't understand that, but they're investing in assets and they're buying these stocks, that penny stocks and stocks that they're never making any profits yet, and it's going up because that's just how the market's work. Everyone's piling money in.
Yeah.
But the moment we got locked down,
exactly,
and then that's when people came out
and they panic. Yeah.
Whereas what I was doing during that time was rubbing my hands.
And
it was my time to shine.
Perspective. I think everyone, if again, because you have the knowledge, I think it's easy for you to say that.
Yeah.
Because you have the knowledge and you know what, if market dips, you know you can buy it because you know it's going to go back up.
Correct.
Everyone else is just selling because they're scared of losing money.
Yep.
But you only lose it if you sell it.
Yes. And that's the thing. What I was saying earlier is when you buy a stock and you look at your phone, you truly believe that's the value. That's you're losing money.
Yeah. You're not.
When you see that red sign and it's going down and it's like minus £100, you genuinely believe you've lost that money. You haven't.
Exactly.
You haven't. It's just a valuation.
Psychology.
It's a valuation.
Yeah.
So one of the things I did many years ago in my Hobbies Lansdowne account is they allow you to remove that kind of valuation where you can see losses or gains.
Okay.
So all you can see is how many shares you own.
Okay.
And I did that because that's how you're supposed to think about it, and that's what knowledge gives you. Over the long term, is that.
That's a really good point. So anyone listening who has these current platforms, so say what you did again.
I know Hobbies Lansdowne do. I don't know about other platforms.
So for Hobbies Lansdowne,
they can allow you can remove your gains or losses, so that all you see is the shares that you own, kind of thing. So it's like property. You don't go every day and say,
checking the valuation.
Let me check the valuation of my property
until you're ready to sell it. That's the only time you actually know the true value at that time.
And I learned that from a book that. It's hard to read. I would say probably most people won't read it, but you could go and watch a YouTube video that summarizes it. But Warren Buffett talks about this guy, not Warren Buffett, sorry, it's Benjamin Graham, who's Warren Buffett's mentor.
Okay.
He talks about Mr. Market. He says Mr. Market is this emotional man, your next door neighbor that comes up to you every day and says, oh, can I buy a property of you? I buy it for this price. I buy it for this price. I buy it for this price. And then the next day is like, I'm not going to buy it for a high price. I'm going to buy it for a low price. And it keeps badgering you with these high prices and low prices. Now, you'd be silly to sell to Mr. Market when it's low.
Yeah.
Right? You'd have done well to sell it to Mr. Market when it's high.
Of course.
And Mr. Market is not rational. Kind of thing. There's so many reasons why the valuations could go up and down.
Yeah.
So that's why the education piece is important. That's why for me anyway, even though I've talked about people doing a passive route, and I think that's how people should start off and just have exposure. You still need to learn. And for my demographic, especially, so passionate about this. We need to learn so we could pass on to our children. I don't think the people that should understand the stock market or any asset class should just be people that are working it. It should be for everybody.
And I think that's why education is so important. That's why even with me, with property, I educate people on what they can do. And I think when they see our stories coming from first generation African homes, and we've made something in an industry that isn't normal for our demographic, that's where you know the power is. And if you just learn and understand it, you can thrive in it.
Yes. And it takes experience. And that's why I said, for me, just getting started, even with lots, it's not lots, small amounts of money is important. It's okay to make some losses. We all make some silly decisions. I've made losses. But now it's like, because I've been investing for how many years now? Over a decade, call it over a decade. I've learned from my mistakes, and I think that probably as we speak, the biggest learning curves is the fact that we're human beings, right? And we have to really manage our emotional biases and our cognitive bias very well. And I think that's the part that I don't see a lot of people talking about.
Yeah.
But I built a portfolio up to six figures, call it six figures.
Yeah.
And that's when I started to experience my emotions take over my rationality. Right? Seeing your portfolio fluctuate by more than you're making a month in one day. Does that make sense? So in one day I could look at my portfolio and how much it's gone up or down by is more than my monthly salary.
That's a
that
lot.
can cause you
100%.
to start
To think
feeling
irrationally.
it's like, oh, I need to sell, oh, I'll make lots of money. Do you know what I mean? So we have to learn how to manage our emotions.
And it's great you teach that. Congratulations for your massive portfolio, because that's really encouraging. And obviously we said before, our parents didn't do it. We're taking the leap of faith in doing things now that our parents didn't do. And by God's grace, our children will learn that as well. So what are some of the effective ways we can teach our children about this from young?
Oh, I mean, it's
or even just about savings. Like what would you put in place for your child to learn about saving at young ages?
I think it's just making the conversation of money a normal conversation. Being part of normal conversations around the dinner table, right? I think
not so formal.
And not so formal. No, not so formal. It's something I encourage couples to do, because you find in most couples, someone cares more about money than the other person. So, if you're a person who cares more about the money than the other couple or the other partner, you might get a bit frustrated that the other person is not as into it as you are, but that person doesn't want to sit down and do some formal conversation about money. So maybe you can just around the dinner table, pop a bottle of wine and just have a natural conversation, right? So for me, it's just making the conversation about money just natural, not making it too formal. But at the same time, I do think there is a time where it has to be a very serious conversation. At least once a year, I think families should really sit down and talk about money.
Look at their finances, go through it, look through budgeting. Where can we add to invest in or add to other things? Because I think it's important. Have a transparency in your bank accounts and what's in there. I think it's imperative for couples to do.
And look, the reason why I started a social enterprise with a very good friend of mine who I grew up with is because when I started coaching people, probably 25 and above now, I realized a lot of the lack of knowledge and mindsets have already been developed.
It's been passed down.
It takes a lot to change someone's mentality when it comes to money, and money is a scary term for a lot of people. Some people talk about it too much or in a very negative way. And so for me, it's becoming more and more prevalent, if that's the word, that actually a lot of the issues when it comes to money is all psychological. For some people, the moment you mention money, the reaction is different. They just start sweating but money is actually, and then there are people that pretend money is not important. Right? They actually don't want to talk about money as something that is important, but actually they go to work how many days a week
for the money.
Right? So intuitively they know that money is very important. And trying to change people's mindsets is not the easiest thing, but slowly but surely. And I think over time, from what I'm seeing, more and more people like yourself, like myself, and are having these conversations. But I also do think community helps as well.
It does.
And having people that are comfortable and also excited sometimes to talk about certain things, because
you learn from each other. There's so much stuff that people say that you don't realize can influence you in a positive way, and they can give you ideas about stocks to do, properties to look at, because you're sharing.
Absolutely.
This whole thing about keeping it to yourself, it just doesn't work.
For me, it's boring anyway, right? Like literally, as we speak, before I came, I was speaking to the man that I run Walk Finance with. And we were talking about our different ideas over the year and the stocks that I've bought and why I've bought them. He's my accountability partner, right? Because again, as much as I know, I'm still a human being. And I still make some decisions that are irrational. So sometimes just running it by someone.
Accountability is so important.
It's so important.
Okay, so my final question. So obviously I'm in property, you're investing. What are some of the ways to invest in property without buying a house?
Oh, I mean, there's many different ways.
Let us know.
So there are asset classes or there are ways to invest in property without actually forking out a lot of money, in a sense that you can buy shares in property companies.
What type of shares are these?
So it's just like you buy shares in Amazon.
Okay.
Same way you buy shares in Apple.
Okay.
You can go and buy shares in a property business, right? So Imagine Property by Jules done amazingly well, and amen. And then you were able to actually go through an IPO process. Now you trade on the stock market. I could come and buy shares in your business. Now your business, what you are all about is property. That's what you're all about. You take the capital of the investors and you build income producing portfolio of properties. Right? Now you can register as what we call a REIT. REIT, Real Estate Investment Trust. And by registering as a REIT, you get some tax breaks, but you do have to distribute 90% of the profits to the shareholders, for example, right? Which is great for me if I'm an investor who's looking for income. So you notice that as I've been talking about investing, I'll talk about your objective. If my objective is growth, then I'm looking at tech stocks. But if I want passive income, cash flow, then I can look at REITs. Kind of thing. So you notice that's why the universe of investment, there's so many things you can invest in. You don't have to just stick with one. But yes, REITs is a very popular way, and they've gained more and more traction as a way for individuals to invest in property without actually having to fork out tens of thousands of pounds or dollars.
Amazing.
Another way is to invest is a similar way, but rather than buying shares in a company, you invest in a fund. So a fund like a mutual fund or even an index fund will be a vehicle that will then go and invest in a multitude of different property companies, right? So I use Property by Jules as an example. Let's say you're a business, you float on the stock market. If I'm a fund manager, I can go and buy shares in your business. I can go and buy shares in another. Who's the other property people? Name me some people. I don't know.
Property by Kazi.
Let's say all of them are floating on the stock market, right? And that's the business was that of a REIT. I could be a fund manager and I can use the capital from all the people that have deposited into my fund to buy shares in
all those different ones.
That's such a diversified way of investing.
So it's not in just one.
And you will not just have one. So I'm not only would I have your diversification, but I have so you spread the risk. Property. And there's different types of REITs, different types of sectors in property. It could be hotels, it could be malls, it could be residential. It could be there's so many different types of properties.
Even more for myself, actually.
I mean, I like to invest in different ways, and I own some REITs because I love the idea of just receiving those dividends. I tell my friend one of the reasons why I started investing in cash flowing assets is again psychological. Every time I get that ping on my phone, say, "Oh," and I got some today. "Oh, you've received a dividend from this company." It just reminds me that I don't always have to work for money.
Passive.
So it's passive income, and that's, I mean, I prefer the term portfolio income because, I'm gassed. But it's just a good reminder that, there's a way to build a portfolio that can look after you in the future as long as you're diligent and you do it for a long period of time.
That's it. I think I'm not saying the younger you start, the better, but it has to be long term. You have to think of it as money that you're not thinking about right now.
Well, to be honest, the younger you start, the better, to be really honest, because you've got more longevity. But it's never too late to start.
Amazing.
I think the best time, they always say the best time to start was many years ago. The next best time is now. Right?
It's tomorrow.
Yeah. Just get started and start with small amounts of money and just get the momentum.
Is there any final word for the listeners on investing, starting, building your portfolio? Any final words?
I think it is a tragedy if someone is out there as a grown adult and they don't actually have any assets. I find it hard to understand. I mean, I get it, but I slightly find it a bit irresponsible now because there's so much information out there. I do understand sometimes you can have information overload. I do truthfully understand that, but I think sometimes it's about just getting started.
That's it.
And just getting started with a small amount of money and then building as you go. Or you can pay for people's professional opinion and all that kind of stuff as well. So that's my kind of my rebuke, but then my empowerment is look, there are so many opportunities to build wealth now. I do believe I'm a millennial, and I do believe it's very difficult for us. It's very, very difficult for us. But I also believe that there are so many opportunities now, more so than ever, to be able to build wealth. And one of those opportunities is the ability to invest in assets at such a low cost, which we have never been able to do over the years. So it is my encouragement that as long as we can earn more than what we spend, going back to the principles, pay ourselves first, we should definitely allocate a proportion of our income to invest in assets for the long term. And if you do that for long enough, you will become financially independent.
100%. Thank you so much, Jax. It's been an amazing conversation. I really hope the listeners have got the gems that Jax has been dropping. Where can they find you?
Oh, where can I find me? So I am on Instagram. That's Jax Financial, Jax Financial, UK. I think I've got UK at the end. I do have a YouTube channel, which I haven't uploaded for a while, but it is my goal to get back into it this year, right?
And you'll get there.
Definitely. And I do have a podcast. So myself and Peter, who run Walk Finance for the social enterprise for young people, we do have a podcast. It's audio only, so we get together every Friday evening, and we have great conversations about money.
Is that Spotify?
That'll be on Spotify, all the streaming services. So yeah,
amazing, guys. You've heard where he is. Follow him, hit him up. Any questions, any one-to-one mentorship you guys need on investing, please speak to Jax. He is the guru and knows it all. But I appreciate your time and thank you so much.
No, thank you for having me. Thank you so much.
Amazing. Thank you.